good evening. You're watching Primetime. I'm Tamanna Inamdar.
And my name is Ayush Alavadi. Let's have a look at today's headlines. Risk to inflation trumped growth concerns at RBI's monetary policy meeting in December.
HDFC Bank is set to raise 24,000 crore rupees. That takes total funds raised by Indian banks this fiscal to 69,000 crores.
Reliance Communications lenders may take a call on converting debt to equity this week. The stock soared 36% in trade today.
Now, shops and establishments like banks can stay open 24/7 in Maharashtra following the state government's notification.
A big legislative victory for US President Donald Trump. The US Senate passes the biggest tax overhaul in over 3 decades. The US Congress is all set to give its final stamp of approval later today. Well, minutes of the RBI's Monetary Policy Committee meeting on December released today showed that the members of the MPC remain wary of the upside risks to inflation. It also shows that the members broadly reached consensus on repo rates and the policy stance. Ira Duggal analyzes the minutes of the meeting in this report.
Minutes of the December Monetary Policy Committee released on Wednesday don't paint the happiest picture of the economy. The underlying narrative coming out from the minutes is one where members are absolutely not certain as to how quickly or how far growth will recover, but they're far too worried about inflation risk starting to pick up to do anything about growth. Let's talk a little bit about what they say or what individual members have said on the inflation front. Remember, of course, that the MPC had kept rates unchanged at 6% and also raised its inflation target mildly at its December meeting. Governor Urjit Patel, talking about some of those inflation risks, said that there has been an increase in inflation expectations of households. He also pointed to rising input cost pressures, which could then feed into output prices as well. And finally, he talked about concerns on the fiscal side, which, if they actually materialize, could have a bearing on inflation too. He did say that some downside could come in from vegetable prices once a seasonal downtick comes through, and lower rates of GST on certain items, about 200 items. Rates had been reduced in November. Some of that could help ease the inflation pressures. But broadly, Governor Patel was of the view that inflation is evolving as expected and there are upside risks to inflation. There were other members of the committee who expressed similar concerns. Viral Acharya, for instance, focused on rising oil prices and the impact that is having on the inflation trajectory. Michael Patra, Executive Director at the RBI, focused on the fact that inflation pressures were starting to get generalized already. Chetan Ghate and Pami Dua also had similar concerns and noted the increase in inflation that has already taken the inflation number to above the RBI's target of 4%. Remember, in November, inflation stood at 4.88%. Now, Ravindra Dholakia is the lone dove on the MPC and continues to argue for a rate cut. He argued for a 25 basis point cut and said that the real concern right now for the economy is growth and not inflation. In very strong words, he said that had the policy rate been cut to 5.75% in June, as I had argued then, the economic recovery would have been far more rapid. Although we have missed the bus, it is still better late than never. Now, Dholakia's concerns are focused on growth. That's not to say that the rest of the MPC is not worried about growth. Actually, the comments on growth are far from sanguine. Let's talk about, for instance, what Viral Acharya said. He noted that the output gap remains somewhat negative. You had Chetan Ghate talk about the fact that consumer confidence has weakened and that investment remains quite sluggish in the economy. The economy is missing animal spirits, as Ghate put it in his statement. Urjit Patel noted that growth has started to pick up a little bit. He also noted to some forward-looking factors that could suggest an impending pickup in growth, although a modest one. He talked about the recent large rounds of capital raising that we have seen from Indian corporates and Indian financials, and a pickup in credit growth, which could mean that there would be a slight modest pickup in investment, he said in his statement. But all in all, most members were of the view that the current rate, that is the repo rate, and the current stance, which is neutral, is appropriate for the evolving economic scenario. Michael Patra didn't vote for a change in stance or a change in rates at this point in time, but he did very clearly say in his statement that it's time to signal an end to this rate cutting cycle, which started in 2015 at 8% repo rate. You have now come down to 6% repo rate, and he thinks this is the end of this current cycle.
Well, the board of HDFC Bank has approved the plan to raise 4,000 crore rupees. This comes a day after HDFC's board approved raising 13,000 crore rupees, most of which will be infused into HDFC Bank. The fundraising plan comes against the backdrop of strong growth in the bank's balance sheet over the last 2 years and an expectation that credit demand will revive as the economy stabilizes. Detailing its fundraising plan, HDFC Bank said that of the 24,000 crores, 8,500 crore rupees will be through an issue of shares on a preferential basis to HDFC. The remaining funds will be raised through an issuance of equity shares. All options are open with regard to the vehicle of issuance.
Well, a day after the board of HDFC approved a 13,000 crore rupee funding drive, Vice Chairman and CEO Keki Mistry says the fresh funds would be used to grow the mortgage lenders' non-core businesses like health insurance and affordable housing. He also adds that the funds would be enough to sustain growth for at least 5 to 6 years. Listen in.
We are looking at setting up either a fund or a company which could look at investing in real estate projects which are under some stress. So we know that, this is a core competence. We understand real estate in India, and we can identify real estate projects where there is some degree of stress. We can go to the builder, take over these projects at an incomplete stage, get the construction completed through another developer, to a reputed developer, and then using the HDFC brand and using our supervision and our skills, we will then turn it around and sell it sell the project. We believe that the scope or the potential for health insurance growth in India is large, and that's the reason why we are looking at getting into it.
Now, as banks in India prepare to meet Basel III capital adequacy norms, quite a few of them have tapped the capital markets. So how much capital have Indian banks raised this year? Well, Shraddha Babla answers that question in this report.
69,000 crores, that's the number, that's the equity fundraising that has been done by banks cumulatively so far this year. That's in financial year 2000 and FY18. In fact, as much as 33,000 crores of this was raised by banks via QIP issue specifically this year itself. And if you look at that number, 33 to 48. Now, this is an interesting table. This is the data that we've got from Prime database. The QIP issuances by banks this year, the total amount is more than what they have done in totality over the last 5 years itself. So that really shows you how much of money they have actually raised this year. And if we move forward, we'll also see that this is basically a picture or the table of who has raised how much and when. Of course, SBI's issue was the largest at about 15,000 crore rupees. So this 69,000 crores is not the only number. In fact, a lot of PSU banks already have board approvals to raise more money, so we could see some more fundraising announcements happening in the rest of the financial year as well.
All right, Siddharth Purohit, a research analyst with SMC Institutional Equity, joins us on the phone line. Siddharth, the key question really is, what are banks going to do with all of this money, and will it help kickstart the credit cycle again?
Yeah, in fact, if you see the amount of capital raising, as you said, has been one of the highest in recent years. And this is certainly a kind of an indication that there is some amount of uptick in the credit growth. And if you look at the RBI data also, the credit growth, which in fact hit multi-decade low of close to 4% in the month of May, now it has started picking up to some extent. If you look at the latest data, it has been growing somewhere close to 9%. Of course, the second half of any financial year normally happens to be a healthy quarter. So banks are trying to scale up in terms of or maybe planning for growth also. But if you look at particularly for PSU banks, most of the banks have also kind of taken a hit in terms of their profitability because of higher provisions. And to meet the regulatory norms as well as to meet the credit growth, they had to raise capital. For private banks, particularly the ones like Axis and HDFC, what they have announced right now, probably they are gearing up for much better growth in the coming year, I would say.
All right. Thank you so much, Siddharth Purohit from SMC Institutional for that analysis.
Well, moving on, United Bank and Bank of India are the latest banks to be pulled up for corrective action by the Reserve Bank of India. With these two banks, the total number of banks identified for corrective action stands at 10. RBI's action was on account of high net non-performing assets or NPAs, insufficient capital and a negative return on asset for 2 consecutive years. Bank of India reported a gross NPA of 12.62% last quarter, while United Bank of India reported a gross NPA of 18.8%. Once a bank is under prompt corrective action, it is not allowed to renew or access costly deposits. It also has to reduce its NPAs drastically. Well, staying with banks, in a set of tweets today, the Finance Ministry outlined the status of the government's bank recapitalization plan. Under the Indradhanush scheme, the government has allocated a sum of 22,915 crore rupees for 13 public sector banks in FY17.
Now, only 75% of this amount, or roughly 16,000 crore rupees, was actually infused upfront. The remaining amount was to be infused based on the individual performances of the banks. However, none of the banks were able to achieve set targets, and hence the government decided to hold back the remaining 25% of fresh capital.
Well, if you're a night owl in Maharashtra, there's good news for you. Shops and establishments in Maharashtra can now remain open around the clock in 3 shifts starting today. The state government has amended the Maharashtra Shops and Establishments Act 2017 and notified it. Purva Chitnis sums up the development in this report.
The Maharashtra government has notified the Maharashtra Shops and Establishment Act of 2017, which allow the shops to remain open 24/7. This includes restaurants, cinema halls, shopping malls, medical establishment. However, it does not include places that serve alcohol. Now remember, currently the shops remain open until 9:30 p.m., whereas the restaurants are open until 12:30 a.m. As per the new law, the employee can work only up to 9 hours a day, whereas a weekly off is mandatory. If a women employee chooses to work in the night shift, that is between 9:30 p.m. and 7 a.m., she can do so only with her consent. This is expected to benefit around 35 lakh establishments across the state.
All right, Anupam T, Vice President of Oberoi Mall, joins us now for his take on this development. Mr. Anupam, thank you for speaking with us. How much of a push, thank you so much, how much of a push will this give retail businesses like yourself?
Okay, as far as malls are concerned, primarily what we have noticed is customers do not really come late evening for shopping. This is, even if we keep it open, they don't. It only helps during festive season, like we have the Christmas and New Year season and Diwali. That's when people still venture out late night for shopping, purely from a shopping point of view. As far as nightlife is concerned, we would have loved if they permitted bars and restaurants to open late night, because that's what people are looking for. Late night they're looking to going to bars and pubs. So unfortunately, they not being a part of this, it's a little bit of a downer. But however, we hope that during festive seasons, we are able to keep malls open late night and let people shop to their heart's content.
Right, Mr. Anupam,
that's our view.
Yeah, it's interesting because, like you mentioned, except for the festive season, shopping might not be as attractive to people. But, the particular bit on restrictions on establishments which serve alcohol and pubs and restaurants, I believe that a lot of that was done to keep, keeping women's safety in mind. But originally there was a lot of ambiguity saying that you'd have to, as an establishment, go to the Home Department and get that requisite permission. Now it seems, it's all set in stone.
Sorry, I didn't get you, Ayush. What did you say?
Mr. Anupam was saying that originally there was some sort of ambiguity when the bill was being tabled in terms of how restaurants and pubs would operate, but now it seems to be it's set in stone. It's definitive that they will not operate post 1:30, and that too with prior permission.
Right. In fact, there is a license that is available for restaurants and bars to open till 3 a.m. rather. And that's a little bit more expensive license, and they can specifically apply for it and get it. But we know that some of our restaurants are going to do that. But however, under this policy, since it's not there, it's a bit of a downer. That's right.
Mr. Anupam, the question is how many establishments will choose the option of staying open till late? You mentioned earlier that the habits right now show that not a lot of shoppers venture out in the late evening. But perhaps once that option is available, you think those patterns may change?
my view personally as a shopper as well as a business owner, what we notice is, suburban areas like Thane and Virar and Kandivali, Goregaon, where people come back late night, it's easier for shops to keep open till 10, 10:30, 11 so that at least essential shopping can happen without regulatory hassles. So from a convenience point of view, it's a great move. But, downtown and let's say, in malls like ours, we really find it difficult. People don't shop beyond 9:30. We had kept shops open till 12 o'clock quite a few times in the last 1 year just as a testing phase, for this law. We didn't see much traction post 10 p.m. We don't see it happening unless it's a festive season, unless it's a Dhanteras or Diwali or Christmas or New Year's Eve, we don't find people venturing out late evenings.
All right, so interesting to see whether shoppers will venture out once those options are open or not. Thank you so much, Mr. Anupam, for speaking with us, Vice President of Oberoi Mall. Ayush, for people like you and I who are working at this time of the evening, I think it's a great idea if you can go out and finish your chores or do any shopping after work. Why not?
Absolutely, and even post 1:30 often when we get done very late from work. Absolutely. But moving on, Indian equity benchmarks snapped 4-day gains after fluctuating between gains and losses all through the trading session. Gains in Hindalco Industries and ONGC were countered by losses in Dr. Reddy's laboratories. Pradeep Pandya sums up the day's market action in this report.
Markets were doing well for most part of the day, but towards the last hour we saw some correction in key indices. So Nifty and Sensex closed lower. Sensex down by around 60 points in last hour of trade. Banking was especially a sector that dragged the markets down. If you look at Nifty Bank or the PSU Bank Index, that will tell you how it really looked. PSU Bank Index lost more than 1%. Well, in terms of contribution to the index, actually the HDFC and Kotak Mahindra Bank weighed down on Nifty really, but we saw a deeper cut in PSU banking stocks. For example, Punjab National Bank that opened lower and stayed close to the lower level through the day because QIP shares issued under QIP hit the market today. And also Bank of India fell in last hour of trade when the news came in about prompt corrective action against the bank. So this was one sector that kind of dragged the market down. On the other hand, we had real estate leading the market. Both the key stocks, DLF and iBull Real, fairly liquid. And broadly traded stocks were up in today's trade. We also had some of the interesting themes that continue to move up, like the agri stock or the rural economy bets that started 2 days back after the Gujarat result. Jan Irrigation continues to move up today. Jet Airways was yet another stock that has been doing well this week, is all set to post decent gains over the week. But a surprise movement came in ADAG stocks. Reliance Communications gaining 35% and Reliance Mayville 10.5%. While interestingly, the news flow is negative. Reliance Communications dollar bond holders are trying to take certain actions against the company. They have come together and hired an advisor, and Reliance Mayville also failed to secure the relief in the bankruptcy case, but stocks moved up nonetheless. PSU telecom companies did well today on hopes of revival. There are some comments coming in from top government officials that kind of boosted this entire sector. Net, if you look at some of the high beta names in construction, infra like NCC, GMR moving up. You had stocks like Moropen Lab, Ramco on some news or otherwise moving up. So there was significant traction in mid cap and small cap, although indices actually corrected in last hour of trade.
Now, lenders of Reliance Communications are set to meet soon to decide on debt to equity swap plan. According to sources, there will be a review on the progress of asset sale plans that Reliance Communications has been working on with SBI Capital Markets. And to Anthony of Bloomberg News brings us up to pace with that development.
Lenders to Reliance Communications will be meeting as early as this week to decide on conversion of debt into equity under the SDR scheme. The lenders have to convert about 7,000 crores into equity, into a controlling equity stake in ARCOM as per the SDR plan which has been put in place. ARCOM has also been working along with SBI Capital on monetizing some of the assets to repay part of the debt. The lenders consortium, which will be meeting this week, will also be reviewing the progress on this. The bankers are telling us that some announcement regarding asset monetization, probably on real estate and spectrum fund, front can be expected by end of December.
Now, Macquarie sees a 60% upside in ONGC and expects realizations and margins to gradually rise with a favorable dividend yield. Somit Sarkar sums it up all in this report.
Macquarie came out with this initiating note on ONGC. Now they've initiated coverage on the stock with an outperform rating and a target price of 290, which suggests a potential upside of nearly 60%. Also, the target price of 290 is the highest target price set by Macquarie in the street. Now, this target price set by Macquarie is relative to their expectations of long-term Brent crude at $65 per barrel. The report says that the current market price of ONGC is suggesting the Brent crude at around $52 per barrel, and also they are bullish on ONGC because they're expecting the production to grow in the coming quarters after 5 years lackluster performance, or after 5 years lackluster production performance by ONGC. They're expecting the oil and gas production to rise by around 35% by financial year 2022, and also on the back of higher crude prices, they're expecting a gradual rise in margins and realizations when it comes to ONGC. Also, they're saying that report says that the free cash flow yield for ONGC would remain at around 5% over FY18 to FY20, and beyond FY20 it would rise to around 14% on the back of completion of its capital expenditures. And when it comes to dividend, they're saying that the ONGC will maintain a favorable dividend yield of around 6% over FY18 to FY22. On ONGC HPCL deal, which is an overhang on the ONGC's stock price, the brokerage says that even if ONGC acquires HPCL's stake at a 50% premium, the deal would still be EPS accretive from ONGC's point of view. Now, the brokerage also has a bull case target price of around 345 rupees on ONGC, which suggests a potential upside of 90%. Now, this target price will be achievable only if Brent crude surges to around $75 per barrel.
Now, Anil Ambani promoted Reliance Naval and Engineering's plea to stay in solvency proceedings initiated by IFCI has been rejected. NCLT's Ahmedabad bench has given Reliance Naval 7 days to file an appeal against its order. Shivani Saxena sums up all the developments in this report.
Reliance Naval is the second company promoted by Anil Ambani pushed into insolvency by its lenders after Reliance Communications. In November this year, IFCI, a state-run development bank, initiated insolvency proceedings against Reliance Naval as well as its subsidiary Reliance Marine on account of a payment default of a loan aggregating to 159 crores. Reliance Naval subsequently approached the NCLT requesting for a stay on these proceedings, given that the IBC itself is being challenged before the Gujarat High Court. While NCLT refused to grant relief, it has given the company a 7-day window to appeal against this order. Meanwhile, the proceedings against the company will continue on January 11th next year.
Now, Donald Trump just moved a step closer to securing his first legislative victory since he took over at the Oval Office. The Senate has passed the biggest tax overall in more than 30 years, with 51 votes in favor of the bill. The U.S. Congress, which had already cleared the bill, will give its final stamp of approval later today.
Well, the bill aims to deliver a deep, permanent tax cut for corporations and shorter-term relief for individuals. It slashes the corporate tax rate to 21% from 35%. Most middle-class workers will also get short-term tax relief, though independent analysis has shown that the amounts are not large. According to the Congress's Joint Committee on Taxation, the new bill is likely to reduce revenue by $1.5 trillion over the coming decade. Taking to Twitter, Trump called the legislation the biggest tax cut and reform bill in history. Now, Kevin Cirilli of Bloomberg News joins us live from Washington, D.C. Kevin, thanks so much for joining us on Bloomberg Quinn. I want to start by asking you, this is a bill which has often been pitched as a boon for the middle class, but popular perception seems to be very different. What's the ground reality in the U.S. right now?
Well, Republicans are arguing that this tax proposal will help spur economic growth as well as offer needed tax assistance to businesses, small businesses and big businesses alike, while also offering a tax cut to the middle class. That said, there are several polls out here that suggest that this is deeply unpopular, and Democrats are arguing that this is only going to benefit the wealthy and not help middle class Americans. There was a Monmouth University poll released yesterday that found that 47% of Americans believe that their taxes will will actually increase as a result of this plan, but Republicans taking in full force effort to push back against that notion. Now, most of this tax plan won't go into effect until calendar year 2018. That said, they're bullish on the prospects that the stock market as well as investors will begin to start to set prices, so to speak, for next calendar year in anticipation of these tax cuts.
Kevin, what impact will this have on middle-class Americans?
Well, that's a great question, and it's one that really depends on who you ask. Now, we should note, while much of the attention is focused on the lowering of the corporate tax rate from 35% to 21%, there's also the pass-through rate, which would impact many small businesses and LLCs as well as larger corporations. That rate has been set at 20%. In terms of middle class, there's language in the bill, that would provide tax credit for families as well. And so the notion, again, is that the administration is arguing that this will benefit middle-class America. But on the flip side of that, it's a very controversial topic here in the United States because Democrats are arguing the opposite.
Right, Kevin, what is the way forward when it comes to this particular legislation? Because it is being viewed as a massive win for the Trump administration.
Yeah, so later today, President Trump will likely give a press conference at about 1 o'clock United States Eastern Time from the White House. The House of Representatives will give its final stamp of approval on the legislation following a procedural hiccup last night in the Senate. So they'll do that within the next hour or two. And then it's onward from here. They're going to have to pass a partial government funding bill in order to avert a government shutdown. President Trump wants to get to infrastructure plan by next year, and Republicans are looking at taking up entitlement reform next spring. Not to mention, if you're a global investor, that there could be some potential changes to Dodd-Frank in the first quarter of next year as well.
All right, thanks so much, Kevin, for that update. Now, moving on to other stories here, Maruti Suzuki made its debut in an elite club today, becoming only the third Nifty 50 stock to amass a share price of 10,000 rupees. The Maruti stock crossed that mark in intraday trade today before cooling off a bit. Eicher Motor and Bosch are the only other two Nifty 50 companies with a 5-digit price tag on their shares. So just to put into a little bit of perspective, if you held 1,000 shares of Maruti Suzuki in 2003, you could buy their best-selling hatchback, the Alto, at 2017 prices. However, if you currently hold 1,000 shares of Maruti at current market prices, you could very well be driving a Jaguar XF. Now, that's an impressive upgrade.
Well, with steel prices soaring and a new insolvency law in place, there could be a war brewing in the Indian steel market. Now, big steel tycoons like Lakshmi Mittal of ArcelorMittal and Anil Agarwal of Vedanta, Sajjan Jindal of JSW Steel and TV Narendran of Tata Steel are all in a race to bag stressed steel assets that are currently under insolvency. 4 steelmakers are among India's so-called dirty dozen, owing more than $26 billion in combined debt. So let's break it down for you. SR Steel owes lenders 77,000 crore rupees in debt, and potential suitors for its business include ArcelorMittal, Tata Steel, Vedanta, and a few others. Bhushan Steel is next with a debt pile of 60,000 crore rupees, and it has suitors like ArcelorMittal, Tata Steel, and Vedanta, amongst others. Now, Monnet Ispat owes lenders around 20,000 crores and is keenly being eyed by Sajjan Jindal's Jindal Steel. Electro Steel Steels is the last steelmaker under insolvency with a total debt of 11,000 crore rupees, and is being eyed by the likes of Vedanta, Tata Steel. All in all, these 4 companies have steel assets worth $26 billion, and the fight for a piece of that pie could be very, very interesting.
Now, the Delhi High Court has dismissed Indigo's plea against the Delhi International Airport's decision to shift a part of its operations from Terminal 1 to the newly opened Terminal 2 of the Indira Gandhi International Airport in New Delhi. Arpan Chaturvedi, who was covering the case, sums up the court action in this report.
Well, in this case, what Indigo's plea was, it was basically a petition against the order of the Delhi International Airport Limited, or DIAL, which directed the company Indigo to and to some other companies to partially shift their operations from Terminal 1 to Terminal 2. Basically, what that means is that certain flights which are operating for Indigo to Delhi Airport, Delhi, Bombay, and Hyderabad, they were directed to be to start operating it from Terminal 2. Against this, Indigo had approached the Delhi High Court, saying that this order of DIAL was arbitrary, but the Delhi High Court, as we know, has not accepted the plea by Indigo. And what small relief that they have got from the court is that the deadline for shifting of operation was January 4, but the Delhi High Court has extended the deadline, saying that the partial shifting of operations now should take place by February 15, 2018.
Now, a whole host of issues were taken up by Cabinet today. It has approved a new skill development scheme of 1,300 crores for the textile sector. This amount will be for a period of 2 years from FY18 to FY20. The scheme is aimed at increasing jobs by offering a demand-driven and placement-oriented skills program. 10 lakh people are expected to be skilled and certified under the scheme. Now, the Rajya Sabha was adjourned twice today after the opposition disrupted proceedings over the Prime Minister's remarks against former Prime Minister Manmohan Singh. The opposition during the 0 hour demanded that the Prime Minister come to the House to clarify his comments against Dr. Singh during the Gujarat poll campaign, where he had alleged that he was conspiring with Pakistan to defeat the BJP in Gujarat. House Chairman Venkaiah Naidu said there was no question of giving an apology, as the statement was not made in the House. And a special Delhi court will decide the fate of several politicians, businessmen and top executives as it pronounces its verdict in the 2G scam tomorrow. The 2G scam was one of the biggest in the country and took place during the term of the previous UPA government. Some of the people named in the scam are A. Raja and Kanimuri of the DMK, Bollywood producer Karim Morani, businessman Shahid Balwa and former director of Anil Ambani's Reliance Group, Gautam Doshi. Those are some of the top national stories, but let's go across to Ayush for what's happening in the top international stories. Ayush?
Well, in the top international stories, there's a big setback for Uber. The European Union's top court has ruled that Uber should be regulated as a transport company and not an internet company. The decision from EU's Court of Justice clarifies that connecting people via an application to non-professional drivers forms an integral part of a transport service. Uber has argued that it is a tech platform connecting passengers with independent drivers. The ruling is significant and is watched by the tech industry, as it could dictate how firms may be regulated across the EU and the world in the near future. Well, Alibaba's new data center in Mumbai will become operational next month. In a statement, Alibaba Cloud, the cloud computing arm of the Alibaba Group, confirmed the development and said that clients can start to sign up for services to be delivered in India. The Mumbai data center aims at meeting the demand for cloud computing services among India's small and medium businesses. With the Mumbai center, Alibaba Cloud now has 33 availability zones across 16 economic centers globally. Well, Bitcoin prices plunged nearly 15% in Asian trade today. This sudden fall was driven by investor fears on news of hacking at the South Korean exchange Ubit. Ubit has said that it will close and start bankruptcy proceedings after hackers stole 17% of its assets, according to Bloomberg News. Separately, US authorities yesterday suspended trading in a popular Bitcoin-related stock, citing concerns about market manipulation. The crypto company's share price had risen 1,700% between the end of September and Monday evening, before the Securities Exchange Commission intervened to halt trades until January the 4th. And staying with Bitcoin, the volatility in Bitcoin prices has got the experts split right down the middle. Co-founder and CEO at BTCC, Bobby Lee, believes that Bitcoin is a great asset class, while the CTO and co-founder of ANX International, Hugh Madden, likens the Bitcoin rally to the tech bubble.
What we're talking about is a truly global non-national digital asset class that's brand new. It just came out, about 9 years ago. And the question is, does it really only stay at this so-called $300 billion level, or is it a $1 trillion asset class? My opinion is long-term, this is one of the great major asset classes, just like stocks, real estate, bonds, precious metals.
A lot of interest and a lot of hype in the technology, and the market prices seem very speculative. On the other hand, I guess we're all a bit cynical about the fact that a lot of change can come through that. And out of the tech bubble, we saw some world-changing companies and some world-changing technology. And so it's certainly gamble, certainly speculation. But on the other hand, we all expect some serious companies to come out of this. And I think also most asset classes are inflated a little bit. You can hardly turn around without bumping into an inflated asset class.
Well, observing that bitcoins cannot be ignored, SEBI chairman Ajay Tyagi says the virtual currency so far has not posed any systemic risk, and a government panel is looking into it to make it legal in the country.
It has to be decided by the government as to in whose jurisdiction this subject falls. It's not something which is voluntary or involuntary is not the issue. Okay, so government is considering as to how to deal with it. We are part of that committee, so they will take a view soon. No, the question, there has to be some process and law or regulatory process, when only you can take action. You can't take through administrative action or something.
Well, that's a wrap of all the global news, and of course, Bitcoin, which transcends borders and boundaries, Tamanna.
Absolutely, the new craze. Thanks for that. That's also a wrap on Primetime, but Primetime debate coming up next, and we are going to look very carefully at this entire story of Airtel and its payments banks, a situation where payments banks were opened, subsidies were transferred to it, and the customer had no clue at all. What exactly happened, and what are the larger systemic issues which have emerged? I remember Airtel has had to pay a fine and return the 190 crore rupees that came in their payments bank. What does it point to in terms of the larger Aadhaar system? We're talking about that next with AP Hota, former MD and CEO of NPCI, and Kiran Junalgatta, co-founder of Internet Freedom Foundation. That conversation up next. Don't miss it.